What's up, everybody? Welcome to the show, Be the Trader. Thank you from the bottom of my heart for tuning in to the show, for subscribing on YouTube, adding your comments, giving me reviews on Apple iTunes podcast, because it helps me a ton, and it keeps me inspired to continue to do this. Just a recap, Season 1, which just ended in 2019, bringing in the new year, I brought in Harry Haas, Jack Kellogg, Kyle Williams, and Brian Lee Trades to interview. They were great traders, and we got a lot of value from that. In Season 2, which just started now in 2020, I've already brought in Tagger Trades, which I was so thankful that he was open to doing that, and then also James Friedlander. So I have much more to come, so make sure to stay tuned. Just to recap real quick, the month of December, it was a profitable month. It wasn't as profitable as I'd like it to be due to fees, commissions, borrows, and all of that. When you're a short seller, it's something you gotta really think about. I mean, when you see these short sellers post on Twitter and they're posting their P&L, the question is, did the borrows get accounted for? Did these fees get accounted for? And that's something that's not necessarily always accounted for. So as a new trader, if you're listening, just know if you want to be a short seller, there's a lot more fees than the long side. They don't have to pay anything nowadays. Free trading, it's crazy. Which makes me want to start dabbling into long bias trading. It's something I'm going to be focused on in the month of January of exploring. And if I do trade that, it's going to be super small. I'm talking about like a $10 risk. So small where nothing matters, but at least I can feel the emotion still when I'm in the trade. I can pay attention to it. Now, big caps is something I'm still focusing on as well, which I actually have been trading. I'm going to continue to do so. But for January, a couple of things I'm going to be focused on to improve on is taking my 3R gain. That's something I still need improvement on. That I did better in December, but I can still improve on it because the first trading day of January, I didn't take advantage of 3 opportunities that were 3R gains. I only took advantage of 1. The other 2 I took like a 1R and I think both of them are 1R or half R. So that's something I can still improve on. And that has to do because I looked at my December trading and realized I wasn't as profitable as I wanted, so I had kind of an ego situation there. But with that being said, I want to start off this podcast with reading a quote I picked up on Twitter. Twitter has some great knowledge out there, and it says, "Want to kill your ego? Imagine your life until now being something you read, not something you were subjected to. Then start thinking about what the character should do." So that's what I'm going to be thinking about this month is if, depending on how yesterday happens, just know, how am I going to approach the next day? What would my character do to improve? And the good thing is, this is the whole reason I did Be the Story, Be the Trader. I want you guys to be the story that your family, friends, and work colleagues share with others. That Dan made it, Dave made it, Kelly made it. Do you know Stephanie? She did this and that. That's what I want. I want you to be the story. I want to be the story. So this is a great quote because it makes you think about that. And this is going to be something I'm going to be focused on the rest of this month, along with, of course, the no-look challenge, which I'm not looking at my P&L for the whole month of January. And I won't upload it until the end of January. And only taking my 3R when 3R is available and cutting my losses when my risk is hit, which I don't have a problem with, and I don't plan on having a problem with as well. With that being said, I want to talk about something that hit me pretty recently in December, and that's thesis versus price action. That's something that was a lesson that I had to relearn or learn really, and that is I had some reason I've been following this problem, or I wouldn't say problem, but this pattern where I see a stock going up, which I always see, biggest percent gainers. That's how I like to find them. And then I do my research. I look at if there's any news, some kind of catalyst. And then from there, I look at the SEC filings, see if there's any warrants, any offerings, any ATMs, and so forth. And then I'm happy with this, process. And then when I found that there was warrants, however, it would immediately make me a short bias trader. I'm already short bias, but it would really make me short bias for this stock's going down. And I would ignore the overall price action. And this happened a couple of times on my trading in December that ended up being losses, and it was a good lesson for me. And it's something I want to carry on in January, that price action is king. There was a stock that was trading some good volume pre-market, I think over 1 million shares pre-market. And it was trending upward. And while it was trending upward, it was consolidating, then breaking out, consolidating, then breaking out. And instead of me seeing that this is stair-step pattern that's consolidating and breaking out and it's trending upward, this is a long bias trade. This is a strong stock, and there's no sign for me to short this. However, the moment I saw the stock break a level of consolidation to the downside, I just immediately thought it's time to short, and I would start shorting. And I'm not saying that's the wrong thing to do, but I am saying that the overall big picture with the catalyst is strength. And that's something that I need to recognize before I just place a trade. Maybe wait for the bounce to show me that it is a lower high and that it's reversing its trend. Instead, I just see the first sign, right? The first sign is it broke the consolidation to the downside. The second sign is, did it give me a lower high? The third sign is it continuing the trend on the downside like a lower low? Something like that. Instead, I got the first signal and I got in. And then it broke to new highs. I got out. I'm not stubborn. But then what the problem is when the market opened, I was shorting again because I thought my thesis was this stock has warrants. It has tons of warrants, and at the market offerings, this should go down. And that's the problem. I had a strong bias that this should happen. And that is something that I want to share with you all, that I'm going to move forward. I was reminded that price action is king. That stock did not come down for the entire day. It actually trended very nicely. And if I was stubborn and I didn't cut losses, I probably had a huge loss. So it was a good lesson. It's something I wanted to share with you guys. So depending on your process, just make sure if you're a long bias trader, if you see good news, don't immediately think this is a long, I gotta buy. Or if you're a short bias trader and like me and every stock that's gapping up, don't think, oh, this stock is going down. Now, I usually don't fall into that issue, but I did fall into that recently with that trade where I was like, this is coming down and here's why. Because I have backup evidence to prove, which is the warrants, the SEC filings. And yeah, it's good to know that information, but it doesn't mean it's going to go down. There's been so many stocks that have spiked and blew through all of its warrants and continue upward and skyrocket. Sometimes those can be the hugest squeezers because everyone's shorting at a level where there should, quote unquote, should be warrants. And there may be, but it doesn't mean that people are going to use the warrants. It doesn't mean that people, that there's not, there might be overwhelming buying that's going to overwhelm the warrants. So there's a lot of factors in play, and this is what I mean by price action is king. My conversation with James Friedlander was very, very eye-opening and very inspiring, uplifting. You got to listen to that episode. Make sure you go listen to it or watch it on YouTube. It's interesting because he finds himself using 30-70 rule, like 30% when it's above VWAP for him means it's not guaranteed to come down. He's a short bias trader, but he goes 70% to full size when it's under VWAP. Like that's his kind of way of sizing. But what we also discuss is maybe it's better to wait for the confirmation. You might not get, 5 cents from the top, 10 cents from the top. You might get 15, 20, but at least you have that confirmation, and then you can hold with confidence for your price target. And that's what I want to focus on too, waiting for those, 1, 2, 3 signals to show me that this stock is coming down, especially if it is already on a bullish uptrend. Of course, that's going to be my focus this month. So I'm hoping this helps you. Remember, price action is king, and they say that for a reason because people have blown up when they have so much strong belief in their thesis in terms of what they think should, and that's the word should happen, and when it doesn't, they fight it. So don't be that person. I don't want to be that person. I'm not going to be moving forward. And that is my goal for January. And it was a big lesson for me. I'm hoping this will help you too. With that being said, thank you for listening to the show. If you can, give us a rating and review on any podcast platform. It helps me a ton. And If you're watching on YouTube, make sure you hit that subscribe button, hit the bell to be alerted when new episodes come. And thank you from the bottom of my heart. Thank you so much for listening and staying tuned. And I'm hoping that you can be your own story that your family and friends share. Take care.